Okay, so welcome guys. Welcome to this introduction to market profile. My name is Chris Morris. I am a trader at Futex Limited. We are a proprietary trading firm, so all our guys, they are generally shorter term traders, day traders, anything from scalping to holding positions 30 minutes, and market profile is something that probably about 90% of our traders use in depth. It's a very good tool in trying to make trading decisions. So we are a proprietary trading firm. We also train graduates at Futex as well, and we are just about to launch a trading degree, master's course on proprietary trading as well. So as I said, all our traders are intraday traders. I'm a trader myself, and what we're trying to do is, part of our strategy is looking to build profits throughout the day, but we're not just looking at making one or two big trades a day. The way we're trying to use market profile in particular is to find those really good high quality trading areas and taking minimal risk but building our profit up slowly throughout the day, taking multiple positions, but just really searching the day, trying to find these high quality trade locations. And that is something market profile is very good. It's very good at finding high quality entries, but also it's very good at keeping you out of the areas in the day where you shouldn't be trading. Okay, and as a profitable trader, that is vital. Okay, it's vitally important that you understand when not to trade as well as when to trade. And also I'll go through some of the trades, or I'll go through examples on the live market of trades that you could have done over the last few days, and we'll have also a quick look at the charts just now, seeing if there's any trades available. Okay, I'll quickly show you what market profile looks like. Okay, hopefully you can see these charts here. This is viewed through CQG. This chart here, where you've got all these letters and what we call profile distributions, is market profile. I'll walk you through it in a minute what we're seeing, but that's just a quick view of market profile. So why do we use market profile? It is an alternative way of studying the charts to understanding what the market is trying to do. One mistake a lot of traders make is they dial down to the very small time frame charts, and they get caught out by big moves. They get caught out about where the big institutional players are trying to move the market. It doesn't matter whether we're trying to hold a position or we're scalping, literally taking one or two prices at a time. We need to understand that bigger picture. Okay, there's no point trying to scalp around if suddenly we get caught out by a big trend move because we missed the bigger picture. Okay, so that bigger picture is vital to understand, and that is where one of the big things about market profile comes in. Excuse me. It's also trying to help us as a trader. It's not just a case of jumping in, making trend decisions, but you've got to constantly ask yourself following questions. What is the probability the market is trying to stay in a range if it is in a range? And then on the flip side of that, what is the probability that the market is trying to trend? Okay, if you can understand or at least give a probability to those two questions, it can help you decide what kind of strategy you should be employing, and also where in the market, in the range of today, you should be placing your trades. And as I said before, one of the big mistakes traders often make is that they overtrade. They're trying to trade every little price movement, and one thing about market profile, if you use it in the correct manner, is it will keep you on the right side of the market, so you're trying not to get caught out by stupid trades. So what is market profile? It is an intraday charting technique. It was devised by J. Peter Steidlmayer, and he was a trader in the CBOT pits. One thing about market profile is, because it was, why it's so widely used is because it was developed by a trader for traders. Okay, he's not just trying to put together loads of fancy indicators. It's actually very applicable to the futures markets in particular, but there's no reason why you can't use it on all different kinds of markets. It is a way of evaluating the market value as the trading day develops, and that's a critical point. As the trading day develops, what's very good about market profile is you can try to work out what the market is trying to do as it's doing it, and again you can attach probabilities to that. And what we mean by market value is, well, where is fair value? Where are buyers and sellers in equilibrium, i.e. where are they happy for the market to be? Obviously in the trend day, equilibrium is constantly shifting, whereas in a range day that equilibrium is fairly stable. So if we can try to find out where market players are trying to find fair value or push fair value, again, that can have a big effect on the type of strategy we use. And with that, if we can understand what they're trying to do, there is that predictive element, okay, of where do we think value is, or where do we think it's shifting to. Again, it can come back to that previous question on what side of the market should we be playing this market from. Okay, so a bit about market profile. What it is doing, and I'll run through how it's built up in a minute, but it is condensing price information to show that information on a curve for a particular day. And it's through understanding the shape of that curve, which is where you can understand where fair value is, the type of day, and again, where you can get trade locations from. Okay, so what market profile is doing is it's replacing a 30-minute bar or candle with letters. Okay, those letters are referred to as TPOs, or time price opportunities. And all simply is doing is all the letters are pushed to the left-hand side of the day's profile. So what I'll do is I'll go to the charts and I'll actually explain what I mean by that. Okay, so if I just move this over. So this is the Eurostoxx future. So what I've got here is on the left-hand side I've got market profile, and on the right-hand side I've got just a simple bar chart, 30-minute bar chart. What these two charts are showing is exactly the same thing. Okay, it's showing just the prices of the market, but it's the way it displays it which is very different. So what I can do is, this here is today's action, okay, and we can see on the right hand side this is today's action as well. They look identical because they are. So the Eurostoxx 50 opens at 7 AM. So this bar that I'm highlighting here is the 7 till 7:30 bar. On the market profile, instead of a bar, it's replaced by the letter K, okay, a lowercase k. So again, what I was saying before is just replacing a bar with a set of letters. When we go to the next half-hour period, up here on the bar chart, we get a new bar. Okay, again, on the profile, we just get a new letter. So these are our time price opportunities. Okay, so they look almost identical apart from the letter versus the bar. But what profile does, it shifts all these letters to the left-hand side. Okay, so they go on top of each other. So if I take these splits off the profile, you can see what I mean. So as we push all these letters to the left, it will look like this. This is our distribution, our curve. So every letter is moving as far to the left as it can until it hits an earlier letter. And therefore we can get a curve or a shape of distribution for today. Okay, and that's what we mean by market profile. Okay, it's just a different way of displaying the same information, but the way it's displayed helps us understand what that bigger picture is and what the market is trying to do. Okay, I've just seen a question here. There's a question here saying, do we provide market profile? If not, where can we get the charts from? I don't know what you mean. If you mean, are we providing market profile for this webinar? Obviously, maybe I'll just answer that question. But plenty of charting providers do provide market profile. Okay, it is out there. You often have to subscribe to it, but it is available. Okay, so that is basically the setup of a market profile. Okay, and it is through that shape of curve that we try to answer the trading questions from. Before we go to the shape of the curves, I'm just going to go through how we get some key market metrics from the profile. Because once you've got that nice curve shape, well, how do I know where the open was? How do I know where the close and so on? So I'm just going to walk you through some of the key market metrics that our traders here at Futex do look at. And it's through some of these metrics that I will base some of my trading decisions on. So the open, close, high and low. How do we actually find that from a market profile? Different providers will show it differently, but all I can see on here, this first small blue triangle on the left-hand side of the profile is showing me where this market opened this morning. Okay, the way this market is currently open, so it's still moving. This triangle up here that's moving here is the latest price, but if this market closed, that is where the closing price would be, how it would be displayed through this blue triangle. The high is simply the highest TPO in this profile for today, which is 22.09, and the low of the day so far, because it's still open, is the lowest TPO on the day, which is 21.77. We also look at, and this is a very big thing that I'm very, very keen on, is what we call the initial balance. And what we mean by the initial balance is the first hour of trade, or the first 2 TPOs of the day. What the initial balance is it's telling us, as the market opens in that first hour, where buyers are trying to push the market to and where sellers are trying to push the market to. It's giving us an idea of the sentiment of the day, and it's giving us a clue of where the initial buyers and where the initial sellers are, because once we go through that first hour, we can actually use that initial balance as very, very good reference points, and again, how the market trades at those reference points can give us a very good heads up to what the market may do or is likely to do. So how do we get the initial balance? Well, the initial balance is the first 2 TPOs. So in this profile, we can see when I added the splits, the first 2 TPOs were the K and the Ls. So I'm literally taking the low of the K and the L, which is down at 21.77. 21.77, and the highest TPO in the initial balance is this L print up here at 21.97. That is our initial balance. This software also shows a black line displaying that initial balance. So when I take the splits out and I see the profile, I can see there I've got my reference points for my initial balance. Okay, we'll come back to trading using that in a minute. We also look at the pointer control, and what the pointer control is one way of assessing where fair value is. Pointer control is basically the price or a price during the day that the most action took place. And if the most action took place, that could be one way of answering the question of where is fair value. If the most action took place there, then that is where the market keeps coming back to when it rotates up and down. So if we go to an example of today, we can see the way to find out the pointer control is by looking at the peak of this curve, or the price that has the greatest number of TPOs. And we can see here we've got 2 numbers, we've got 89s and 90s, both with the same amount of TPOs. Okay, we do take 90s because one way of evaluating if there's multiple points of control is we always take the one that's closest to the middle of the range. Okay, and it's going to be 90s. So that is an idea of where fair value was today. Obviously the market is still open, it's still got almost 3 hours to trade, so it could change. With only 3 hours to go, it's probably going to stay around the 90 point of control. So that gives us an idea of where buyers and sellers were most happy for the market to trade today. When it rotated down, when it got to lower prices, buyers were coming in, responsive buyers were coming in, pushing the market back to where it came from. And when the market got to higher prices, responsive sellers were coming to the marketplace and excuse me, and selling the market back down to fair value. Okay. Finally, we've got buying and selling tails and single prints. they can be confused, but what a buying and selling towel is single prints at the high and low of the day. So what we can see here, and what I mean by single prints, is a price where there is a TPO but only one TPO. So we can see at 77s, 78s and 79s there are just one TPO at those three prices. That is at the low of the day. That is called a buying towel. That represents responsive buyers coming in and rejecting these prices, telling us that there's good responsive buying down here, and there was a lack of selling pressure. The market did not spend much time down here because it only spent one 30-minute period throughout the day here. So this was not fair value. Responsive buyers came in and rejected these prices and pushed them higher. Okay, we have got a selling towel up here at the moment, but what we do have to be careful of is the market is still open and it is very close to this selling towel and it could take it out soon. But if the market closed now, we have also got a selling towel because we've got three single prints or prints of just one TPO at the high of the day. Okay, for a buying or selling towel, we need at least two consecutive prices of these single prints to represent a buying or selling towel. Okay, so we have definitely got a buying towel. We might, depending on what happens in the next half an hour, we might have a selling towel. Okay, so that is what a buying and selling towel is. And then finally, again, very, very significant, we have a different kind of single print. And when we refer to generally single prints, we refer to single TPOs that are not at the extreme. So if I go to a separate day, okay, let's take these off. So if we go to yesterday, and we can see yesterday we had quite a stretched distribution. Okay, we've got a distribution down here, and then during the day we traded higher and we found a new distribution higher up. You can see here we've got 3B single prints. These are single prints, and the definition of a single print is a single TPO on a price that has multiple TPOs above and below, i.e. it's not at the extreme. Again, we've got another three single prints here on the C print between 75s and 77s. Okay, single prints are a very good signal that the market is very aggressively trying to find new fair value. It's trying to trend. Okay, and again, we can use that in real time as the day develops. Okay, so that's some key market metrics we can find from the market profile. Okay, so once we know what those metrics are, let me just go back a step. So each profile represents one single trading day. And what we can see here is this is today, and as we go further to the left, this was yesterday's profile, and then we've got Monday's profile and so on. So each individual profile in default settings represents one single trading day, and each letter represents 30 minutes. When you go to more advanced levels, you can actually condense multiple days into what we call a merged profile to get an even bigger picture, but we won't go into that today. So what's very important is we've got those metrics, which I'll show you some examples in a minute, but secondly, visually, it's the shape of the distribution that can keep you on the right track in terms of trading. And by looking at that the shape of the distribution or the shape of the curve can give you a heads up into what kind of day it is. Basically, today, okay, and that is a very typical day. What we've got there is what we call a normal or normal variation day. What we mean by that is it looks a little bit like a bell-shaped curve. Okay, very thick in the middle of the profile, so around here, around the center of the day, there's many, many TPOs. That is telling us it spent a lot of time around the middle of the day, i.e. traders were happy for it to be trading there. At the low and at the high, it's got the curve flattens out. Okay, that is telling us it has not spent much time at the high or the low. Therefore, the market was rejecting here and rejecting these prices. Basically, it is a range day. That is what a normal distribution is showing us. So again, when the market opens, if it shows signs of it being a normal distribution, we can then try to employ a more range type strategy to our trading. But if it's not showing signs of being a range day, it's likely to be what we call a trend day or it could be a double distribution day. What that means is constantly throughout the day, as you might expect, in a trend day, the value is constantly shifting. Traders are constantly trying to find where fair value is, and therefore we do not have this nice build-up of volume in the middle of the day, but we're constantly looking to trend up or trend down. So if we go to yesterday, we can see yesterday's profile does not look like today's profile. It's not a normal distribution. We had one distribution, and then we had these single prints, which is a representing buyers coming in and aggressively pushing this market higher, trying to find fair value, and eventually it found it in the high of the day. So the shape as the day was developing was giving us a clue to what the market was trying to do. Okay, there are different types of, they're just the two basic types of day, the normal variation day and a trend day or double distribution day. There are some ones in between, but I won't go into too much detail yet. Okay, so what you're probably more interested in is how do we actually use market profile to trade? And these are some examples of the types of trades that our traders will be looking to use. So, what's very, very important as a trader, and this is a mistake that a lot of traders, especially novice traders, make, is they form a bias, maybe based on certain technicals or certain fundamentals, and they try to force that viewpoint on the market. So you might come into the day going, there's been some good news overnight, I'm bullish, I'm going to try to buy this market. What's very important to be an successful trader is, what's the most important thing is tapping into the market sentiment and letting the market tell you what it's trying to do, and also when it is trying to do that thing. There's no point you trying to buy it all morning, trying to hoping it's going to be an uptrend, and you've been stopped out and lost a lot of money, and by the time the afternoon comes it produces that uptrend, but you're no longer participating in that market. So what's very good about being a successful trader is if you don't have an ego and you let the market tell you what it's trying to do, you've got a greater chance of success. Okay, and so when we go back to we're going to go to the initial balance now, and this is one example where we are letting the market tell us what it is trying to do. I don't need to come into today with a bias of whether it's going to be a bullish day, bearish day, or a neutral day. It doesn't matter, as long as I use certain reference points and analyze the market as it's hitting these reference points. So if you remember, that initial balance was the first hour of trade. That is telling us in the first hour where buyers and sellers are trying to move this market to. So what's the question is after that first hour, so in the US stocks, when we get to 8 o'clock in the morning, the cash market comes in. We've already got the initial balance from 7 till 8. The question is, after 8 o'clock, how does the market trade at the initial balance high and at the initial balance low? If we can understand how it's trading, again, it's going to give us some high quality entries and give us a clue to what maybe the market is trying to do that day. All I'm really concerned about as an intraday trader is what it's going to do in the next half an hour. I don't need to worry about, is it going to stay in this day type for the rest of the day, because the day types could change throughout the day. But I'm just concerned about the immediate future. So some answers to that question could be, does that initial balance high or the initial balance low, does it act as support or resistance? If it does, there's a good reference point I can base a trade off of. But if it breaks the initial balance or the initial balance high, does it sustain the break? i.e. if the initial balance is broken and the market trades below the initial balance low, does that then become resistance? If it does, that is telling me something very, very significant. If it doesn't, and it comes back inside, again, that is giving me a clue into what the likelihood of the day type might be, or more importantly, what the next few trades could be in terms of high quality that I could do. So, a normal distribution day or a range day, okay, that nice bell-shaped curve, it should rotate around the initial bounce high and low. Okay, today was a very good example of that, and I'll go back to the example in a minute. A trend day is where the market aggressively leaves the initial balance high or the initial balance low, and it's going in search of new value. Okay, if you can work out that it's not coming back inside that initial balance, again, it's giving you an early heads-up sign that the market is trying to trend, or could be trying to trend, or at least in the short term, at least to make you some good money in the short term. Okay, so let's go and have a look at some examples. So we use today as a great example of the initial balance high and low, and how that was giving us a heads up into it being a normal distribution day. So I'm just going to add some splits into here so we can see it as it was building up throughout the day. So the market opened at 77s, drove up, and we had the L print come in as well. So we had the initial balance range at 97s and at 77s. So this market, the US stocks future, opened at 7 a.m. By 8 a.m. I've now got two very good reference points, and I'm going to use these reference points to base trades on. So what happened then is 8 till 8:30, okay, we had the M prints come in, and what this market did is it traded higher up to 97s. It did put a high tick in at 98s, but it couldn't extend through the initial balance high. Once you see the market can't actually break 97s, that is telling us that this market at this point in time, just like a normal resistance level would act, there's a lack of buying at these levels. Therefore, there's a good chance that this market is going to go back the way it came from, at least into the middle of the current range. So a very cheap trade to do, and a very good trade to do, is to literally play a very simple trade at the initial bounce high, the initial bounce low, with a very tight stop. So I could sell 97s, I could offer 97s. If it can't break it convincingly, I could have a simple stop at 2 or 3 ticks through the high. If I don't get stopped out, that market should come back to at least the middle. And the middle of this range is going to be 87s, a nice 10-tick target. So if it can't break that 97s, there's a very good high probability chance it's going to come back to the middle. Okay, so you can work out a very good risk-reward ratio to do a trade like that. As the morning went on, okay, we were just rotating up and down within the initial balance. Again, in terms of the US stocks 50, you're going to have to modify this for different markets, but you want to understand the characteristics of your market. But one characteristic of the US stocks is when the cash market comes in at 8 o'clock, between 8 and 9:30, if it's going to have a direction, it should show you some evidence during that first hour, hour and a half, that it's going to try to do that. If it stays quiet, then there's a good chance as we work through the European morning, it's going to stay quiet. Okay, so the fact they couldn't break the 97s and came back into the middle was giving us one clue. This market, at this top point in time, there's no good buying. So we could look to actively sell resistance every time it gets there. And by mid-morning, okay, we got back up there on the R print, okay, and that was 10 o'clock. 10 o'clock we got back up to this 97, the initial balance high, and the current high of the day. And because we had good sellers there at 8 o'clock, we can assume that's still there because we saw evidence that there's a lack of buyers. So we could sell that 10 o'clock print And again, there should be a very good chance that it comes back into the middle of the range. And you can see back within less than an hour, it'd come back to the middle of the range. Okay. As the morning went on, we got into the European lunchtime, so it probably would have quietened down. And we just settled around the middle of the day. What you will notice is it never actually got near the low of the initial balance. Okay, if it had done on these N's or P's, if it had come down here throughout the morning on the N's, the P's, the T's, whatever it may have been, I would have a very good high quality trade, because it's a very quiet day and it's showing signs of building volume in the middle of the day, is to place a nice long position around 77s, looking to trade it back into the middle of the day again. So if it had got down here, I would have been happy buying 77s and looking to get back up to 87s. So again, because of what it's doing here, there's a good probability it could do something similar here if it gets there. Unfortunately, it did not. But what you can see is throughout the morning, okay, it had a nice normal distribution around the middle of that 87s, 90s. Okay. What we had in the afternoon, we did have an extension higher. Okay, so it's still a normal distribution, but what you'll notice, if I had the splits again, is when we broke on the C print, when the US afternoon, or our afternoon, the US came in, when the C print came in, we broke through the initial balance, but what's very important is we kept coming back inside. Okay, and the fact that it can't leave this 97s and extend further is telling us that this market is struggling to trend. Yes, it's extending the range, but it's not doing it in a way that is giving us a heads up that it's trying to do a trend. So yes, it is breaking initial balance or reference point, but the way it's doing it is not aggressively, therefore I can still try to find resistance, okay, and send it back into the middle of the profile. We did have some volatility on the FOMC meeting about an hour ago, and we did extend the range slightly, but again, we extended the range and we've come back and it looks like we're heading back in again. There's no big significant buying pressure in this market or selling pressure. Okay, very rangy day. If we look at yesterday, actually we go to a better example, Monday, and using the initial balance Monday. So this one on the far left here is Monday morning. We had some very significant news overnight on Monday that the market was in anticipation of, and that was the Greek elections. And we had a favourable result with New Democracy winning the elections. And the market was very fearful of those elections, so it actually came out to be semi-good news. And the market took that very well. It opened up, and we actually, I won't go into gaps today, but we did open up with a gap. Friday we closed at 72s, and we opened on Monday morning up at 98s. Okay, so we opened a lot higher, reflecting the Greek elections. And a lot of traders would think, brilliant, the Greek elections, very good fundamental news. The market has been hoping for this. We've got confirmation of it, therefore let's be bullish. Remember what I said before, let the market tell you what it is trying to do. And this is, Monday could be a very good example where a lot of traders could lose a lot of money by having a bias based on fundamentals, but not allowing the market to tell them if it is bullish or if it's not bearish. We've actually seen this kind of setup many times recently to do with this Euro crisis and overnight news. And what we can see here is we had quite a wide initial balance on Monday morning. Okay, so bullish news, bullish fundamentals, okay, and quite a wide initial balance. What I need to see as a trader when the cash market comes in at 8 o'clock to be bullish is that we hold the initial balance low at 98. If this market's going to be bullish, we should see buyers coming in at this first reference point. The And also, we should extend above the initial balance high. If we can't, if we do, then that's confirming that the market is enjoying this bullish fundamental news and is discounting it very positively. But what happened when the cash market came in, and this is the end print, is it didn't even test the initial balance high. It couldn't even go and test where the pre-market had opened. But what it did do very quickly was it sold through the initial balance low. So as a trader, you should be going, well, why is it trading through the initial balance low? When it's bullish, it should be bullish. The fundamentals tell me it's bullish. As a trader, you should be instead saying, well, look, the market's opened with a gap. It's now can't extend higher, and it's now broken through the initial balance low. How does it break through the initial balance low? If it does it aggressively, you know something is changing in the market, and you've got to change with that. And what actually happened is we had quite a big extension on this M print, as you can see here. We had quite a good sell-off, a good 10 plus ticks from the initial bounce low. So as 830 comes in, for this market to stay bullish, it should be able to come back above 98. If it can't come back above 98, then that is extremely, extremely significant for the rest of the day. As I said before, if it breaks away from the initial balance and can't come back inside, it's often a very good heads up the market is trying to trend and is looking for new fair value. Basically, where it opened was overvalued and responsive sellers came into this marketplace. Therefore, this market is now telling you on the end print, the fact that it couldn't get back above the 98, that the open was not fair value. It's lower down, and that's key. If it's lower down, we should not be now trying to buy this market. We should now be trying to sell this market. A very good sell would have been when it breaks 98, if it breaks it aggressively, to resell it if it comes back to 98. Let me just check. I'm not sure if it did actually come back and retest 98. So I'm just checking on a 5-minute chart here. So 98 was this level here. Okay, so on a 5-minute chart, we broke through the 98 down to 92s, and it did retrace slightly. It retraced it all the way up to 97s. So at 8:15, when it broke 98 down to 92s, my question would be, if it can't get back above 98, go short. Okay, it traded up to 97s and couldn't get any higher. Therefore, that is a very good clue and a very high quality trade to place a short around that area at the best price you can possibly obtain, and a very simple stop loss back above the 98. Okay. Once the end print came in, you can see here we actually left single prints. Okay. The fact that we've left single prints is again another heads up that the fact that this market is trying to trend, and it's trying to trend lower. So we now have to forget that the Greek elections were bullish news and now concentrate on the fact that this market is now telling us that it's trying to go lower, and therefore we shouldn't be trying to buy it, we should just go with it. Okay. And you can see now the fact that the significance of that initial bounce, that one price, will keep us on the short side of this market. And you can see we had a very, very big sell-off that day. For the Euro stocks, there's a very large range. I think it's about 72, 74 ticks that day, which is a very significant. Okay, so that's a couple of ways we can use the initial balance to make a trade. A second example of trading using market profile. Buying and selling tails. So if you remember, buying and selling tails are the exhaustion points or the extremes of the market where there's multiple single prints. It is a sign of exhaustion or rejection in the market. The market has found responsive buyers, which is the buying tail at the lows, or responsive sellers at the highs, which is a selling tail. Again, what I said earlier about market profile is very good at keeping you out of the bad areas to trade. You don't have to trade that actively to be successful. You just need to pick your moments. So if we've got a trend forming, what a lot of people try to do is go, this trend has gone too far too quickly. Or if it's an uptrend, let's try to sell it. Or if it's downtrend, let's try to buy it. Do not try to preempt tops or bottoms, because you might have to use a lot of trades and a lot of money trying to find that high or that low. A high probability is to actually wait for a selling or buying tail to form as confirmation that the market is now exhausting itself, and you can now start to go against the direction of the trend. Before that, just stay with the trend. Okay. Once the buying or selling tail has been identified, you can look to trade in the direction of that tail. So let's have a look at a quick example. So again, I'm going to use an example, but also tie it in with some fundamental information. If any of you guys are trading and you are actively day trading, you'd have been aware that there was a very significant German figure out yesterday at 10 AM London time. There was a confidence figure out of Germany. Basically, it's a confidence figure about the state of the economy. That came in very below, very poor, very below expectations. The simple interpretation is, if the figure's bad, that should be bad for risk assets, i.e. Euro stocks. Therefore, a lot of traders would try to sell on the back of bad fundamental information. If I open up yesterday's profile, you can see we had quite a tight initial balance. We broke through it, okay, and this P print was actually the half hour before ZEW, and it's actually, we had some very negative comments from Angela Merkel at the time. But the Qs came in as this German data came out. Okay, so the market is starting to look weak. Okay, bad fundamental data has come out. Therefore, we would expect this market to continue to sell off. Okay, so before the data's come out, if I just bring up, okay, so this is what the profile looked at pre 10 AM. Okay, you can see here we've got a large or many single prints on the low of the day. Once we see those single prints, the question is, well, if we leave single prints here and we start to trade down here, that is a sign we are going to trend. But if we leave single prints on the low and we start to trade these prices, that is a sign that we might be leaving a buying tail and picking up prices what they perceive to be cheap prices and driving it back where it came from, back into here. So ZEW came out and we only traded down to 37. We couldn't touch the low of the day. With very bad data, we should be able to trade the low of the day when it's that close. And we started to trade back up where we came from. Therefore, by looking at profile, we'd left a buying tail of 2 ticks, of 2 single prints down here. So, negative fundamental information, but the market profile is now showing us that we've got a buying tail, that buyers are stepping in even though we've got bad data. Therefore, listen to the profile. That is telling us that the market is striking to sell off. Therefore, we shouldn't be trying to just continuously sell this market. There's a good chance it's going to go back to where it came from, to the middle of the day, which would have been around the high 40s. Okay. Again, it can keep you out of the sell side. And if you realize that, you can try to start trying to buy this market. Again, you can control your risk very well. You could go to a very short time frame chart and look to find support on, say, a 1 minute, 5 minute chart, and look to buy that support once you've got this confirmation. Or you could buy at the first opportunity with a stop below the low. Okay, multiple ways you can trade that. But again, this is showing us that the market is struggling to sell off. Therefore, we should be looking to get long. Okay. Okay. I won't go through in too much detail now because I know the time's getting on. I just want to go through one quick example, but a couple of other ways of using market profile. You could look for ledges. Ledges are build up of volume which can act as support or resistance. If the market is not trending, ledges can be used to place high quality entries at the extreme of ledges to fade the market. Okay, a quick example of a ledge, what I mean is just a build up of volume. Okay, so here, okay, once this day's formed and we're in this day here, I can see we've got a big ledge here. The TPO suddenly drop off. Okay, if you look at a normal chart, you might see a lot of resistance up at 78, but the fact that we've got this ledge at 74s, you could often use this as early resistance before it gets to the high of the day. So you could start to look to sell this resistance or this ledge, and you can find some other examples as well. Another very good way of using the profile is using yesterday's profile as a guide for today's action. So if yesterday's profile was a very strong uptrend, you could assume that today is going to be a strong market, and you're just looking for confirmation of that. Okay, so I just want to go through one more thing quickly, and that was yesterday's profile. Okay, so we already spoke about what happened here at 10 AM with the German ZEW, and we came back within the middle of the profile. Okay, let's just take some. So up until 1 o'clock, we were just rotating up and down. Okay, again, signs of just normal distribution. Okay, so at that point, we would just play a normal range strategy, looking to sell resistance and buy support as we found it. But what happened as the US came in the afternoon is we actually started to find some very strong buying, and we actually left some single prints. Okay, you can see the B's and the C's. Once these C's have come in here, okay, and it looks like this market is leaving single prints, again, that is the first sign that the market is no longer in a normal distribution, i.e. range, and is now starting to trend. So until these single prints are filled in, you should be looking to stay long and looking to buy any any intraday support and looking to go with this market. Okay. What I can also do is just, and what market profile does is you can see multiple days at the same time. So there I can see the last 4 days profile. Once we created these single prints and we traded higher, I can use previous days profiles as support or resistance. And one of the best trades of this day was I don't have to be on this trend early. I can wait until a high quality setup. So I've got confirmation in the C print that we've left singles on the B's. Then the C's come in and again aggressively trades higher. The D's come in and look where the D's found support, or the lower the D print was again Friday's high, and also where the single prints start on the Monday. Okay, and that is a very good level there that you could identify before as a very good idea of where support could be. So the market traded up to around 86s, back down to this support, and then traded higher for the rest of the day. Okay. Okay, I'll leave it there because I know I'm pushing towards the end of my time. I'd just like to thank everyone for listening. A very good book as a reference to market profile is Mind Over Markets by James Dalton. It's one of the books that we give our traders here at Futex. One of my favourite trading books. Very good explanations of how to use market profile. Also, if anyone wants to find more information about our company, please do check out our website below. Okay, Dan, are we going to questions, or how are we doing for time?
Sure, we got time for questions if anyone wants to just type them in there, if you don't mind, Chris.
That's fine.
Let's see if we get any more questions.
How can I see? They're all quite... So that, I think that's a question there. Please provide details of contact, technical training, contact details. Again, if you just go to Futex, you can find out how to